Warren Buffett is undoubtedly one of the most famed investors of our time. Agreed? What if I tell you exactly the kind of companies that he holds in his investment portfolio? Would that guarantee you financial success? You would think so, right? But here is where you are absolutely wrong. My name is Arpit Arora. I'm India's leading personal finance expert and passive income coach, and I'm on the quest to help more than 1 million middle class Indians to live a life which is completely free of money worries by helping them upgrade their financial IQ. So, let's talk about what the scenario in which you are able to know the exact portfolio of Warren Buffett, and should you copy that portfolio to get the same financial success as he has? We already know that today, the time that we live in, we are able to buy even foreign stocks using different methods that are available even to Indian investors. So, knowing that you can easily copy the stock portfolio of Warren Buffett if you get to know that, you'll be interested to know that as per the company filing that Berkshire Hathaway has to do every single quarter, you are able to know the exact portfolio of the money, the allocations, and the stocks in which Warren Buffett or Charlie Munger, or you can say Berkshire Hathaway, has invested in. But what are the reasons why this thing will completely fail? In fact, this will fall flat on your face if you copy this method, because here are 5 main reasons why this is not something you should do. The first reason and the most common reason is risk return ratio. So Warren Buffett and Charlie Munger, or Berkshire Hathaway for that matter, are investing as per a certain risk and return. These are those sort of investors who are the most famed, the most prime investors in the world, who are able to buy at such times in the world, find those kind of companies, get certain type of deals which you are not able to. Just like in 2008 when Warren Buffett bought the shares of certain banks, one of them was Goldman Sachs. He was not only able to get the price at a discounted price because the markets were falling, that was open to everyone, but he also got a very high dividend on that share, something that was given as a preferential stock to Warren Buffett, and extra dividend was paid only and only to him, something you will not be able to get. Also know that his risk to return ratio is completely different to yours. You might be someone who would panic in a time like this, while Warren Buffett on the other end is going to add more into his investment, especially in a time like that. So just copying his portfolio would not guarantee you financial success, because his risk to return ratio is completely different to yours. Second, let's talk about the holding period. Do you know the philosophy that Warren Buffett actually believes in is that you buy a company which you thoroughly believe in and you never sell it? His ideology is that you make a lot of money from the dividends. Do you know he's done that with Coca-Cola? The first time he ever bought in that company was in 1987. He's still invested in that company, and every year the dividends keep on increasing. They have been on an uptrend in the last 57 years per se. Can you believe that? This is the mindset, that this is the kind of holding period that Warren Buffett has. Do you have the same? Probably not. So you're looking at making a quick return, or you're just thinking of investing and then getting out at some other point. Warren Buffett only churns his portfolio. He ideally does not book profits. He simply moves out of companies he does not believe in, invest into others, something he's done recently, but in most other times he just buys and he leaves. He's done that with a lot of companies in the past. Which brings us to the third point, and a very important one. So when Warren Buffett churns his portfolio, you don't get to know what price did he sell his old stock, what price is he buying the new one. That is a data which comes way later on. But you are trying to copy him. You might, in a volatile time, end up doing bigger financial mistakes with your money. You might be buying the same stock at a way higher price. Something at the time of your execution is completely not a discounted price, but a premium price or a fair value price. So then the competitiveness or the edge of the investment is already lost. Because this data, which is the point number 4, that the data that you're getting is old, it's not fresh data. You are only trying to copy what he did 2 months, 3 months ago, with the viewpoint that you're going to get the same prices, which likely is never going to happen. That ways, you are acting on old data, which is why your returns are definitely going to be less. Now, the last and the most important one is that your ideology of investment is not really to copy someone. You really want to make money. And why do you want to make money? Because you want to achieve your financial goals. So your investment strategy should be as per your financial goals, not really as per how Warren Buffett is investing, because his financial goals are met. Yours have to be taken care of. So you need to custom make your own action plan, your own strategy, your own risk management systems to ensure that you are able to grow your money, achieve your financial goals, and do so without taking a high risk. There's one more thing I want you to know, that the investment philosophies of Warren Buffett and Charlie Munger especially, they don't say diversification. They say diversification. Why? Because they don't believe in investing in a lot of places. They concentrate their money into certain places and they invest there very heavily. They're happy to sit in cash for years, something an investor like you will not be comfortable at all. You will not be able to hold yourself when the next opportunity comes, wherein these sort of investors sit for entire 2 to 3 years to just wait for a crash, wait for an opportunity, only and only invest. So understand their mindset of how they manage the money is not the same as yours, which is why you might be able to copy their portfolio once, but you won't be able to keep up with it. And that is how you'll end up losing your money rather than making it, despite knowing exactly what they hold on a certain date at a certain time. So I hope this video gave you a new perspective. It helped you to understand that you need to learn from the investment styles of these people, not but really copy them, something where you would go wrong. So create your own strategy, learn and upgrade your financial IQ, find ways to create your financial success using systems and methods that are applicable to you, not universal, not to Charlie Munger, not to Warren Buffett. So if you like this video, I really hope you'll put in some comments, share what your feedback was, share it with people who you think can benefit, and definitely subscribe to my channel for similar, much more interesting videos than these.